Welcome to The Explainer. If you're a new investor and you're kind of looking at the 2026 market feeling a little anxious, well, this is for you. We've dug into insights from top financial experts to build a super simple, step-by-step playbook to get you investing with real confidence.
Okay, let's just stop and think about this quote for a second. This is from BlackRock's chief investment officer, and it's a huge deal. It's basically saying the days of just throwing money at something and hoping for the best are, well, they're over. For 2026, it's not about gambling. It's about having a smart plan.
So to help you win in this new market, we've put together a straightforward playbook. The whole point is to give you clarity, to give you confidence. And we're going to start with the single most important piece of your entire financial life, your own brain.
Right. Before you even think about investing a single dollar, we have got to talk about the #1 threat to your portfolio. It's this sneaky thing that can completely derail even the most brilliant investment strategy.
So what is it? A market crash? Soaring inflation? Another recession? Nope. The biggest danger to your money is actually a lot closer to home than you think.
That's right. It's you. Believe it or not, decades of research show that our own psychological wiring, these little biases we all have, are the main reason we make bad, often costly investment decisions. Let's look at 2 of the biggest traps we all fall into. First up is the herd mentality. You've felt this before, right? You see a stock just taking off, your group chat is blowing up about it, and it feels like everyone is getting rich without you. That feeling, that fear of missing out, or FOMO, is so powerful. It pushes you to abandon your plan and just jump in, which usually means you end up buying at the top and selling in a panic.
And then there's this one, loss aversion. Our brains are literally hardwired to feel the sting of a loss about twice as powerfully as the joy of an equal gain. It's why we hang on to losing stocks for way too long, just hoping they'll come back, when we really know we should just cut our losses.
And this imbalance is so critical to understand. The pain of losing money feels urgent. It triggers our fight or flight response, and it leads to irrational, panicked decisions, like selling at the absolute worst possible time. But the pleasure of a gain? It's much quieter. It rewards patience. Knowing this about yourself is your secret weapon for making smart, long-term decisions.
Okay, now that we've started to work on our mindset, let's talk about building the actual foundation for your financial life. I know this isn't the sexiest part of investing, but I promise you, it is without a doubt the most important.
You see, before you even think about picking stocks or funds, you have to build a solid financial base. Think of it like you're building a fortress around your money, one that can protect you when life, inevitably happens. So here's how we do it. This is what we call the financial order of operations. Step 1, build an emergency fund. You need 3 to 6 months of essential living expenses saved up. This is your safety net. Step 2, if your job offers a 401k match, you have to contribute enough to get the full amount. It is, and I mean this, a 100% instant return on your money. It's free. And third, crush any high-interest debt you have, like credit cards. That debt is actively working against you, so getting rid of it frees up cash to invest.
Okay, with that fortress built and your foundation secure, now it's time for the fun part, actually assembling your investing toolkit. Let's look at the essential building blocks you're going to need. The most important principle, the absolute core idea here, is diversification. And this analogy from the SEC is just perfect. You don't know if it's going to be sunny or rainy, so you prepare for both. It's the exact same idea with your investments. You never, ever want to put all your eggs in one basket.
So let's break down the main asset classes. First, you've got stocks. Think of these as the growth engine of your portfolio. They have the highest potential for returns over the long run, but they also come with more risk. Then you have bonds. These are like the ballast on a ship. They provide stability and income when the stock market gets choppy. And finally, you have what I think is the secret weapon for new investors, ETFs, or exchange-traded funds. They let you buy a whole basket of stocks or bonds all in one go, giving you instant diversification.
So how do we take these tools and actually build a portfolio that makes sense for the 2026 market? Let's walk through a simple, diversified example you can use as a game plan.
Now, a really important heads up here. What we're about to show you is just an example. It's a framework to help you learn how the pieces fit together. It is absolutely not personalized financial advice. Your own strategy has to be based on your own goals and your comfort with risk.
A common starter allocation, something that's really inspired by today's market, might look a little something like this. The biggest piece of the pie, 40%, goes into a broad U.S. market fund that tracks the top 500 companies. 30% is then allocated to growth and tech stocks for that higher return potential. 20% goes to high-dividend stocks for income, and that last 10% is kept in cash or short-term bonds for stability and to jump on opportunities.
And the great thing is, you can build this whole portfolio super easily with just a few low-cost ETFs. For that big U.S. large-cap slice, you could use something like VOO. For the growth in tech part, maybe QQQM. For high dividends, SCHD is a popular one. And for cash, you could use a money market fund. See, you can get a really diversified portfolio with just a handful of simple investments.
We've covered a ton. We've talked about mindset, the foundation, the tools. You basically have the entire playbook. So what's the single most important thing you can do right now?
It all comes down to the magic of compounding. And I love this snowman analogy. It's perfect. The most powerful force in your portfolio isn't picking the perfect stock. It's time. Your only job is to get your little snowball started, no matter how small, and just keep rolling it. Time and consistency will do the rest.
So let's recap the 2026 Investors Playbook real quick. First, get your head right. Second, build that rock-solid financial foundation. Then, use simple but powerful tools like ETFs. And most importantly, remember the goal is just to get in the game with a plan. It's about participation, not perfection.
And that brings us to our final thought. And this question is for you. You have the playbook. You have the tools. So, what's the very first play you're going to run to start building your financial future?